Hey guys, thanks for tuning in to the Musketeers Crypto Roundtable with the main man Sam and Mr. T. We've been on the line chatting for a long time, really trying to pull apart and understand what is the best thing to deliver that's going to be useful and actionable for everyone in the newsletter going forward. And it's very clear to us around the picture of where is the future in the short term going for the general global economies. We look at the US currency, the US markets, inflation, interest, the European markets, and the extreme challenges, potentially even touching on Russia, but we don't want to make it too long. So it's kind of unreadable because there is so much happening right now. But really trying to tie all of that in and then give some clarity on action steps. What does this mean? Because everything's about macro. We spend 85-90% of our time, effort, and energy focused around what's happening in macro, because that's going to tell us what's happening in crypto next. And then giving some clarity on strategies around how can you actually action the insights that we're sharing, because that's effectively what this is all about for you. So rolling out a couple of different strategies that we would recommend, and then how to really move into the next phase of the market. Sammy or Tristan, do you have anything that you want to add? We were looking at different charts that I can certainly share with people. I guess the declining euro, the US dollar, which is just going on an absolute wrecking ball, and the impacts that that's having for a lot of countries. And we did also touch as well on the disguise, you might say, of the money printing, just giving it away instead, how they're backed into a corner. And it's really, it's an interesting time that we haven't really seen this unique position exactly like this ever before. So Sammy, anything you want to add?
Well, yeah, I was just saying to you before, I feel like my brain's going to explode with the amount of things happening and the consequences of where it's going. And I think just in simple terms, if anyone's watching this and just curious about what's happening, the US dollar is just surging higher, and that's reasonably obvious. And you can look at that on your chart with the DXY, but the underlying fundamentals can be quite complex on how that is actually going higher. And in very simple terms, countries around the world are selling US treasuries that they own, that they thought was a safe asset, to prop up their own currencies. They're selling their own currencies, anything they get their hand on right now, and selling it for US dollars. So inside the DXY, or what it essentially is a basket of other fiat currencies. So the euro, the yen, a few other currencies that are getting absolutely beaten right now. And there's other dynamics on why the euro is falling so significantly. But the yen as well, why that's falling as well. So that basket of currencies against the US dollar is suddenly looking incredibly shaky, and the US dollar being the global reserve currency and being the number one currency for debt and trade throughout the world, there is a huge deficit for dollars right now. And Powell continuing to tighten interest rates just creates that scarcity across the world as well. So you've got multiple layers that are just hitting us. And as the dollar goes higher, obviously risk markets, so stocks and things like crypto, really don't get much love. So we're really waiting for the next shoe to drop with the European crisis, because it looks like it is spiraling a bit out of control, and we're just not sure where that's going to land. We have some ideas about where that's going to land, which we might add to the newsletter, and I've certainly shared it with the masterminds on what I think is most likely going to happen. But like you said, Joe, we're in uncharted territory here. It's we've never seen so much debt to GDP in the world right now, and the US is trying to hike into a recession and a global calamity and multiple layers of issues that are happening in the world. So we're going to see something big happen, I feel, fairly soon. But right now, it doesn't feel like Bitcoin's getting much love, and I don't think we can really be too positive in the real short-term aspect. So hopefully we'll dive into that a bit more.
Yeah,
And
absolutely.
look, and I'd just add in just to say, I guess, that, we know that markets are always very forward thinking, so they're always trying to price in things ahead of time. However, I would make the point, and I'm happy for anyone to try to contest this point, is that the market does operate purely on what the news is, of which is mainstream. So You know, the market will respond to mainstream news before it responds to some secret hidden blog that actually says where everything's going right. And, you know, everyone at CCI knows that, you know, for a while, many would have thought I had a tinfoil hat, and you might as well upgrade that to a crown now, because we're starting to see it all upgrade to a crown, because hey, look, we understand the CBDC narrative. We understand that for CBDCs to work, we first need to get rid of traditional fiat currencies, and that CBDCs, similar to everything that the world's gone through for decades, but particularly in the last few years, is that there's a problem, and all of a sudden they're going to come up with a solution. That solution is going to be, so if you can sustain the argument that CBDCs will be the solution to like the complete dissolution of like global fiat currencies like the US dollar, the euro. So what I'm getting at is that the mainstream is what we need to tune into to understand where we are at right now. But if you want to start forecasting towards, you know, where this could all go, then perhaps the perspectives, the economic perspectives that you would have previously attributed to being a tinfoil hat theory is now something that's like, okay, well, perhaps we are working towards these ends. Like, we are here talking about crypto. That's what we know. That's what we do best. And we know that every country in the world is working on a CBDC. So, you know, and they're insanely unpopular. So it will be presented to the population in a way like it's a solution to your problems and things like that. So I'm looking at things like the currencies, right? And I'm like, this is just my perspective. And of course I can be wrong, but I look at it going, cool, this is a crash that we've actually known was in the books for a really long time. We've been really closely paying attention to the mainstream and what's happening right now, but we've had enough forecasts from pretty reputable like economists and stuff. Again, it's not people that are tinfoilers. Like they're like, okay, cool, this is where the world's headed. We can see that in Europe, they are happy to let their people go without power and starve before they actually say lift the sanctions on Russia, which is one thing that I think, you know, while obviously what I'm touching on is probably not particularly positive, if we are going to look for a sign out of this sooner before it reaches some particular end game like CBDCs, I would think that we would be looking very closely at whether Europe goes, hey, look, nah, this is too much. Let's lift the sanctions on oil from Russia, because we know Russia will give them oil if they just lift the sanctions. Like they've said, this is one thing with, you know, without diving into that particular conflict, one thing we do know is that
not necessarily.
Well, we do know that Putin doesn't. No, you're right. No, please jump in. But like, all I would say, and I'll finish up on, is that Putin doesn't mince words. Like he says what he means, and there's not many people that can refute that.
Yeah, my main point around that is Europe's gone down so far one way, and Russia's now gone down the other way. If Europe caves to Putin right now, he will dictate terms. And I think Europe and NATO will not want that. He could say, all right, I'll turn on the taps now. You've lifted the sanctions. Fantastic. Now give me X, Y, and Z in Ukraine, and we're all sweet. I just don't see Europe doing that. And I actually foresee them going down the harder route right now, because they're just so well committed down that path. They're going to actually tolerate what's going to come. They're going to outbid everyone else in the third world, take all their energy the best they can, and then they're going to print until their eyes bleed. And I think that is what is happening right now. We're seeing it in Britain in the short term to sustain the social contract from everything breaking down and the cost of living crisis just spiraling out of control. They're going to print. They're going to give people a ton of money just for survival. I think that's where I see it. Not survival for the people as well, but for governments. No governments in history have really survived when the populace underneath them is cold, hungry, angry, and poor. So we're seeing some pretty interesting dynamics. And you can also argue that, okay, well, they give everyone money, sure, but does that increase the amount of energy that's actually coming to the market? No, but it might sort of stave off things until things improve. And the longer Europe can actually survive in this position, the less dependent they become on Russian energy over the next few years, the more screwed actually Russia becomes, because the sanctions are really hurting them. No matter what people are projecting, it is hurting them significantly by the country. Their economy is totally in the dumps. No one really wants to trade with them. They've got a ton of energy. They cannot sell anywhere right now. They're trying to move it through China. They're trying to move it through India. But the infrastructure to actually send all the LNG, the gas, is predominantly which way we're looking, western facing. It's not actually going through Siberia. It will take years for them to increase their tonnage, which I read 250 tons, something around those of LNG over the overall capacity of Russia. Only about a third of that, less than a third of that, goes through China. So even if they want to increase that, they don't have the pipelines to do it. So, you know, Putin's in a real interesting spot here, as well as the Ukrainian war situation. Again, I won't get in the weeds here, but they're starting to get they're starting to lose pretty badly on the battlefield as well. So I think as long as Europe can get through this winter, I think things turn significantly the other way. But in the short term, I think the narrative really is, and for the longer term investors here, and that's what I am. I'm not really interested in the short term, apart from helping with the analysis and forecasting and maybe some short term plays. But longer term, this is what's happening now is exactly what maybe a lot of us have thought is going to happen over the last few years in this space. We thought governments were eventually going to have to print money, a lot of it. We thought fiat currencies had a lifespan on them. Some things, some catalysts would have to come up to try and trigger that and accelerate that. This is one of those catalysts. It's not pretty, it's not fun, it's not nice, but was it ever going to be nice? No. And I think a big block of first world countries like Europe and the euro, the currency that they have, going under, that is pretty bad. But you know what? It happens everywhere around the world. And like Tristan, you were saying as well, like elsewhere, we think before, not on this chat right now, but we were talking about Africa and a few other nations and inflation rates and whatnot. Multiple countries around the world have suffered from hyperinflation and insolvency and going under. Well, you know what? It's the West's turn to really feel that, unfortunately. And again, this will turn. This is a phase. Risk markets will get love again when liquidity is pumping out there, and especially when you look at the fundamentals of something like a crypto. That next phase is this is what it's built for. So this is a real turbulent phase. So I just maybe wanted to make that point as well.
Well, you made me think of something then. I think about everyone here knows that I'm bullish on Merit Circle for scholarships and their play to earn mechanics, but ultimately they've got this massive treasury, right? So, and I had to effectively own up in the previous newsletter to go, yeah, look guys, they got this massive treasury, but they didn't actually use it to protect the price. So, you're pumping liquidity, but it goes down and you're just pumping liquidity into it, but it's still going down and effectively becomes someone else's exit liquidity. Like that's kind of how I see any attempt from money markets to try to bolster and to try to protect it. I just think that it's not going to operate under that thesis like what I had with, say, Merit Circle, for example. Like, oh, your token price is getting wrecked, so you'll just melt half your treasury and she'll be all good. It'll be like, no, you're not going to have enough to throw at it because it's just going to turn into exit liquidity for other people. So I guess in based on what we're talking about, no matter whether I'm right or Scoop's right, or we're actually both right, I think the one thing we can agree on is that everyone's stuffed at the moment. No one's got the appetite to invest on risk on if they're looking at their electricity bills going, cool, that's going to cost 3 times the amount. Oh, food's now 4 times the amount. Oh, and my currency's devalued 30% at the same time. So there just is not the, there's definitely the institutional players for sure. They're gobbling this up. They love it. But as for the retail investors, which is where you really do get that growth, in terms of if you want to go to the moon, you're generally doing so off the back of not just institutions, but retail investors too. I can't see retail investors coming back for some time. That's just my opinion. But that's not to say that as far as crypto goes, that this won't just play out like previous cycles. Previous cycles is, we get our little, the halvening happens, everything's on the up, we hit a high, boom, we're down for 2 to 3 years. And that's like a repeated cycle. And that's something where we got wrong. We could have sort of, we were looking at, the chart here, for example, and thinking, oh, we might be in a super cycle here. That was a proper thesis that we held for some time. But then the macro just flipped so insanely negative from the moment the Russian-Ukraine conflict began. From that point on, it was just cool, the super cycle theory is out the door now. So now we are effectively we are in a bear market. So how I think a good result is that we actually do spend some time down here. Many are obviously fingers crossed, hoping for a really quick recovery, but we want the macro to reflect, create that environment for risk on investors that they can sort of jump back in, because right now it's the regular person, the regular Joe Blow is just hanging around waiting for some longer term indicators or news, you know, or some sort of development that's like, okay, we can start taking risk again, because you don't take risk when you're actually literally contemplating whether you have enough money to actually survive, which is what most of Europe is being thrown and thrusted into at the moment.
And I will add, it's being a smart investor is about understanding risk versus reward as an investment opportunity, and really identifying that at any point in time. If you see there's more risk coming, adding to where we're at, then the reward might not necessarily be worthwhile trying to take that play. But right now, I would suggest it's pretty evident as to what we're seeing with increased risk levels. Therefore, it's getting too high against a potential reward play. Therefore, you're better off sitting on the sidelines or trying to play some of the strategies that were outlined in the newsletter at the end of this month as well. Because there's still a ton of money to be made in these markets regardless. And money is made in a market that goes up and down and also sideways as well, if you have the right strategies. And that's everything that we'll be outlining. So yeah, interesting times ahead. Tristan, why don't you...
to support what you're... Sorry, I was just going to say, just to support what you were saying, Joe, is that, you know, right now, I guess there's a lot of concern around the merge, because once the merge is done, and there's a set of concerns there as to whether the Infura APIs, for example, can actually handle that degree of transaction activity, because these APIs have operated on Ethereum, which were just like 7 to 15 transactions a second. And, you know, they're seeking to scale that. So, you know, there are still a lot of uncertainties around the merge, but the point that I'm getting at is that the lead up to the merge was quite profound, because the market is just desperate for good news, because there is liquidity in this market, and the liquidity is going to flow to where they perceive there to be opportunities. That's why so much money flowed into Ethereum. So I still think it's valid. I still think we can look at things like CoinCow, like we often do, and we'll like keep an eye on some of the events coming up. So I think the last time that the three of us had a chat, we'll talk... Actually, no, Scoop wasn't here for it. We were talking about EOS, and we're like, oh, EOS has some really good events coming up. And then sure enough, it was up 40% like 3 days after.
I just put it in my danger zone. I put it in my danger zone.
That always is going to be in your danger zone, though. It's never going to leave. He's been too heartbroken in the past, folks.
But so that's part of what we were outlining, the strategy of there's still a ton of opportunities there, and it's staying focused, minimizing your risk, and capital preservation. That is really the core focus in these times, so that when you do make when the opportunity really flags, then you make those significant plays into the market, and that's where you can make a ton of money. So exciting things to come, but there's definitely
Stack Cash and DCA Sats.
Yeah, there's definitely some tumbling down the hill until we find that flatter ground before we can have more clarity.
Can I just throw out there something? Because I looked in my mastermind video last week, because I really wanted to look at the monthly chart, because you know how everything feels very bearish, the macro is just overwhelming, you know, all that. It's like, well, at some point it does have to reverse. And I wanted to have a look at historical bear markets and where we're at. And you just see that box. I looked at 2017 there on the monthly. I just found where we're at currently looks very similar to that bottom there. Yes, the macro is, you know, much different. But where we are currently, just sitting on this, if you, sorry, zoom in there, I just found it looked, I'm really looking for time here across accumulation bands. So it was about 140 days in 2018 where we bottomed underneath the 21-month moving average, and then until we broke out of it. And now we're in this sort of box here as well. And until we make a new low, I still will maintain my base case is that 17,500 was the low. And now we're in a pretty, you know, sticky, horrible area of accumulation where we had a bounce. Where did we have it? 25,000, I think recently we had. And now we've had a retracement down to, I think it's the Fibonacci 0.786. Exactly what happened in 2018. So for me, you know, there are similarities, and it's not going to be exactly the same. It's not going to rhyme. Things are very, very different. but a lot of the leverage we had in this market's now gone. I'm just wondering where these big sellers are coming from, as well as we know underneath this support area, and this is maybe for the bulls in the mid to longer term, maybe not so short term, but we get underneath the low. BlackRocks of the world and institutions are looking to. I've seen some of the buy orders underneath that level. It's pretty interesting what's going on. I think any crack beneath it, it could be very exciting, but looking at it, I don't really see too much different from previous cycles. If it's the same sort of dynamic leading into the halving where we are currently. So I maybe wanted to throw it out there in case we're being a little bit too doom and gloom. Because for me, if this monthly candle rallies back above that, what was it, 0.786 there?
Well, Scoot, we can substantiate our bearishness during this month because we do know that September is the poorest performing month for cryptos. You can scale that back to 2009. September is always, there's maybe 2 or 3 years where it wasn't the case and it was kind of neutral, but every other year it's blood. September's blood. I remember it when I first came back to crypto. In fact, I actually was a client myself. Like when I started being a client with you guys was around September of 2020, and that was just an utter bloodbath.
2020.
Bloodbath. That was rough because the fundamentals were strong. So. The fundamentals were so strong, but the market was just like, nah, we don't care. Like we're dumping on your hopes and dreams. I'm like, oh, great. It wasn't even like macro, no kind of macro like what we have now, right? Like no sorts of like external macro conditions that made us thought like, okay, hey, there are things breaking. Like, so right now, not only are we seeing like we're in September, it's the poorest performing month out of every other month, but we're also like you yourself were saying, like, I'm starting to see some things like actually break now. Like,
and it's, I would just really emphasize it's knowing when to flip, because you can be sucked into hopium and it's bearish and you can be punished for that. And then you can become bearish and you become really bearish. And then you kind of live in that mental state and then you miss the obvious play because you doubt yourself. And that's why the mindset of what we work on is so important. So that's that September candle that you're referring to. And it would be very easy to see this rally and then get smashed here and think, oh no, this isn't right. But then you see the charge out of it. And a lot of people, what they tend to do is they will panic sell, they'll feel fear, then they'll see the price going up, and then they will resent it and they will doubt it, and then they wait until it's too late, and then they get in here and then they get slapped around the face again. There's such a psychological behavior that typical investors go through, and that's what we want to help you to break by giving you some clear and easy strategies to follow. So Chris, I was going to say, just handing over to you now on the fundamental side of things. So how are we positioned? Do we have something coming out in the middle of this month? Is that the plan, or is that next?
Yeah, so middle of this month, it'll be a stretch. As a lot of you guys know, I'm working on the NFT apparel seed sales at the moment. So life is crazy stressful, but I am seeking to get another 6 project updates out like I did last month. So just quickly looking at that now, I think I left you guys at Matisse, if I'm not mistaken. So we have updates for, we have updates for Phantom, which, honestly, there's not much going on at Phantom, to be truthful, nothing that differentiates it. We have updates for Merit Circle, which of course, I still love Merit. I think it's a great concept, and they're continuing to build out their protocol. And then we have Polygon, which will obviously be a huge one, obviously, because there's so much, like since we covered it in January, heaps has happened. It's going to be quite a thick update for you guys on that one. And then of course we'll have Ethereum's OS and Cosmos as well. So those should be the 6 projects that we'll seek to lead with at the middle of this month. If for some reason it doesn't come out, I'm just simply saying that, I'll let everyone know at least a couple of days before if, something bad happens and I can't do it. But that is absolutely my intention to get it out in the middle of this month, because what we want to do for the newsletter for you guys is that you know, there's so much to digest at once, and you're waiting for a month, and then suddenly you just get hit with like 90 pages between me and Scoop of just like hitting you with all the goodness. So we figured, hey, let's break it up. Let's do the fundamentals in the middle of the month, and then Scoop can wind up the end of the month on the final Thursday of the month, and I'll go for the middle Thursday.
Yeah, nice. I think that's going to be much more digestible for everyone. To have a shorter.
Well, what you were looking at here too, just for me to, you know, like you would to support what you were saying, you need to seek out, if you're insanely bearish, you need to seek out a bull case. And if you're insanely bullish, you need to seek out a bearish scenario too. So I would look at this, just what you've done here, and I'd go, okay, it's on, like right now, the price is on a really important SR flip. So if it breaks this level, like, you know, with the 2017 high on the 1st of December, mark there. So right now, like that high is effectively now the support level for where we are right now. And I think that's an important level. And I think if that breaks, obviously that's going to hurt. And there's going to be some more downside. However, there is also a case to be made that it could form support, but I think everything is just too heavily factored into the macro right now. You know, so if the S&P sneezes, Bitcoin is going to catch a cold no matter what. That's just the way, that's my view. And that's, I guess, what we'd be looking at is the S&P, which, you know, even just looking at that, I mean, I can see a case for it coming up to the MA there on the 200. I can see a case for that, I guess, or on the red line, the horizontal line, sorry.
Yeah.
But yeah, I think honestly, we just need to keep a close eye on it. So if you're going to make it,
completely agree. Sorry.
Yeah, and I think if we're like Joe was mentioning, I don't know if we mentioned this or before we jumped on, but the only thing that anyone should be doing right now, in our view, is dollar cost averaging and seeking out short-term opportunities. So if you're seeking out a short-term opportunity, you're going to want to keep an eye on how the S&P opens in the pre-markets. So if you get a pre-market open and it's higher than when it closed the day before, then that might be enough of a bullish signal for you to get into it. But if you see that is going to open below where it closed, unless you're opening shorts, don't even think of opening a trade. Like, just be patient.
Yeah. And I just want to really remind everyone to be careful of bear market rallies. Where, like, the trend is down and interest rates are going up, and they're going up until they're not. So even though we might have some relief through printing or stimulus or whatever it is, and until that is really fully under control, the trend is down, from certainly what I can see, and I think from what everyone else will agree. That's why we're saying short-term plays are a great opportunity at this point in time, because it doesn't take a lot to flip it, have a really strong charge back up, but you can see the highest high being preceded with a lower high, lower high, lower low, lower low down this channel. And it's clear, even if we do have a breakout, I think it's going to be sucked straight back into that channel unless things can really change, which so much would have to change for that to be possible, which it's not happening.
It's all to do with the dollar.
I think it's such an important thing to talk about too, because even in the lead up to the merge, you know, everyone was just getting like, oh, we're back. Like, people were saying things like that. Oh, we're back. I'm like, no, you mark my words, the highest we'll get, if we even get there, will be 26K. And then we're going to form a new macro low. No, you're crazy. Like, look at the market structure. It's good. I'm like, I know market structure. And I'm telling you that this is like you say, this is a bear market. This is just a relief pump. You know, it's, you know, because people need to also understand what happens in the markets when leverage positions open. You know, if a short opens on the market, basically it's almost the equivalent of like a sell. And then once they close that position, it leads to a buy. So when you see this little pump, like, a lot of that, people may interpret that like, oh, there's heaps of buy orders coming in. It's like, no, people are just taking profits on their shorts. Like, you know, and then the reverse is also true for longs. So that's why we are very mindful on like excessive leverage in the market, which is an observation that Scoop made before, that like, hey, where's all this sell pressure coming from? Because there's really not a lot of leverage. So that's the bulls thesis, the upside thesis, in the event that, you know, we do happen to find support in this really important SR flip. I guess that's all I would just say.
Yeah.
On that.
The more the US dollar becomes a wrecking ball, the more it destroys economies around the world. So something's going to have to be done to manage that ASAP.
Exactly. That's what I was just thinking to myself. I mean, everything that we're looking right now, like it's all on this chart. S&P, crypto, all that. It's all to do with the dollar. And the higher this goes, the more countries are getting wrecked, and the euro just gets under so much further stress. So I think things are beginning to break, and the Federal Reserve will be watching this, especially yields going higher. So the bulls will want to be watching two things. It's the dollar chart, the DXY, and also the Federal Reserve. You're on Twitter, if you're looking at a lot of communications, if any language begins to filter out that they're really concerned with credit lines, swap lines, liquidity, the state of the euro, how their aggressive tightening regime is having a really big effect on the world, I think that is the language that markets are really going to love, and the dollar might actually see a bit of headwinds there. Because the market, in my opinion, was really trying to price in those last 3 interest rate rises in the back end of this year already, but the euro situation has just thrown it under the bus. So I think markets do actually want to try and do a bigger bear market rally here, like you said, Joe. But it really, this is the thing. There's these few factors at play here, and it's so uncertain right now. And the dollar can continue to keep going higher. Probably wants to go higher. Everyone wants dollars, but the Federal Reserve wants to stop that eventually, because it makes the United States in a really tough position with their own debt situation as well.
Well, I'll be bearish in the macro for a decade if we break that 118 level. That's a new high on the macro. No, thank you, sir.
Then we'll all be using dollars. I think by that point we'll be dollarized.
CBDCs. Own nothing and you'll be happy.
Your crown. Where's your crown?
Here's my crown. Own nothing and you'll be happy.
Awesome. Well, thank you guys for sharing your insights. Thank you everyone for tuning in. And we will get to work on the newsletter. I think that the 13th of September is a pivotal date when inflation numbers come out. So we'll see how much they've reduced by. We should be moving in the right direction, but who knows? It's wild what's happening. So you can't predict anything. We'll just wait. Don't get caught into the marketing hype of interest rates of this or that's what we're going to see with inflation rates until the numbers come out. As we've learned a number of lessons, they're not speaking the truth anymore. So rely on data. Data is your best friend, as we always say. Any parting comments from you guys before we jump off the session?
I just have a little poke at Scoop just to say Russia's not losing, but I didn't want to extend this conversation another 30 minutes.
I think everybody's losing in that one, to be honest.
Well, look, everyone's just losing everywhere. So everyone's just losing everywhere. I was just being cheeky.
Maybe my parting gift would just be try and stay positive. Go for a walk, go for a run. Consider what's really important in life. These are just markets. Life goes on. So that's my part.
That's a good place to end it, I think. Yeah.
Oh, well, and I was going to say the people that make the most money are the people that can position themselves where the value is against what everyone else is saying. So if everyone else is feeling down, then people step in and that's where they make some serious money. So that's what we're positioning ourselves for now, finding that point of maximum pain. And that's where you step in. Don't be part of the pain. Observe. I don't want to say observe others' pain, because that sounds a horrible thing to say, but that's the reality of it. Don't become that. Just watch it. So, and then you'll be able to position yourself really.
Well, it's like you always say, Joe. You go against the consensus, not with it. That's how you make money. So if everyone else is suffering, then,
yep.